morning, everybody. It is a pleasure to be here, Your Excellency, and have the chance to lead a conversation on a topic that is close to my heart, as well as my work at Chainalysis. But most importantly, it's central to the growth of FinTech, and that's the collaboration between regulators and firms, and particularly FinTech firms, which are really at the cutting edge of technology development in this space. I'm Caroline Malcolm, the Vice President of Global Public Policy at Chainalysis. And Chainalysis, for those of you who don't know, is the world's leading data analytics platform working to help governments, traditional financial institutions, fintechs and crypto-native companies to meet their compliance obligations, understand trends in the digital asset markets, and to protect consumers by investigating illicit activity. I'm very glad to be joined this morning by a C-suite of representatives from both regulators and industry. And I'd like to kick off the conversation by turning first to one of our regulators, Peter Smith, Managing Director of Policy, Strategy and Risk at the DFSA. Peter, you've been a regulator for more than 30 years, and in 2012 you joined the DFSA, which is the independent regulator of financial services conducted in the DFIC. You're now leading the work, driving DFSA's strategic planning, oversight of the policy framework, and understanding the supervisory risks that DFSA faces. What are some of the most interesting developments that you've seen of late in the fintech space, and how do you as the regulator keep up with the constant innovation?
Thanks, Caroline. Good morning, everybody. It's a really good question, and I could probably spend the 40 minutes that we've got talking about interesting things that we're seeing in the market at the moment, because there's so much going on in the DIFC and here in Dubai. But I'll just cover three things relatively briefly. So firstly, I'll talk about tokenization, and here I'm not just talking about the crypto part of the world, although we're going to be spending no doubt some time touching on that this morning and in the rest of the events today and tomorrow. What we're seeing increasingly is alongside a lot of crypto activity is a lot of people looking to do things with tokenization of what I would call old-fashioned assets, stocks, bonds, fund units, and increasingly looking at tokenization of real-world assets, put it that way. And what we're seeing is interesting. I reckon about half the people who come to us talking about tokenization know why they want to tokenize, because they see increased efficiency in the processes around the things that they want to do. And roughly half of the people who come to us and want to talk about tokenization, I think, are riding the wave of tokenization, if I can put it that way. I think they have to have a token, but they may not be entirely sure why exactly. But we're seeing a lot of activity and a lot of real innovation difference there. Secondly, can't let things go by nowadays without talking about artificial intelligence. And obviously, rules-based systems and some sorts of machine learning systems have been around in the financial services industry for quite a long time, delivering things like aspects of financial advice. And from an AI perspective, I'm sure many of us in the room have engaged with one or other chatbot from one or other financial services institution. Some of you may even have enjoyed the experience. And I think what we're seeing now, and the explosion in generative AI tools over the last 6 months, illustrates something of where the industry may be going in this, but we're seeing more and more people looking at and indeed using AI, machine learning and other technologies to improve their processes, to improve their risk management. And so there's a huge amount of activity there. I think it's clearly not, these things are not all fully deployed yet, but there's so much going on there. The last point I'll touch on in terms of interesting areas is in the ESG and sustainability issue, which you may think, well, carbon emissions, what's that got to do with sort of technology as such? Well, there's obviously lots of things that are in there. And as the UAE moves towards hosting COP28 later this year, I think we expect to see the use of technology and innovation to address ESG-related problems in the broadest sense, not just climate change issues, will increase. But in relation to that, and in the sort of theme of our session today about cooperation and working together with the industry, we're involved in the Global Financial Innovation Network, which is a group of regulators who are interested in innovation and technology and promoting that. And GFIN has recently launched a tech sprint asking people to come forward and help regulators use technology better to identify greenwashing in financial services, which is potentially a huge issue in terms of making the transition to net zero. So the ESG and use of technology is something we're starting to see more things in, and I expect, as I say, over the course of this year towards COP28, we'll see lots. How do we keep up to date? The honest answer is with difficulty. I think many regulators have always been told that they're at least one step behind the market. And in one sense, there's no reason why it would be any different with technology and with innovation and with the changes that we've seen over the last 4, 5, 6 years. So it's a challenge to keep up to date. We obviously invest in our people, but we obviously try and recruit people with specialist skills. But you have to devote time and effort to trying to understand what's going on. The best way we find to do that is actually to engage with people and talk to people about their ideas. If they can explain their ideas to us, that helps us understand whether we might be able to regulate it effectively or not. And the answer isn't always that we can, or indeed that we need to. So that's really, really important. And the engagement with the industry, but broader stakeholders, academia, and so on, is really, really important for us to try and understand what the issues are. Once we can see what the issues are and what the business proposals are, we can then improve our understanding and try and work through how we actually deal with that. And just as a quick plug for that, in terms of us talking to the industry, if any of you have free time between 11 o'clock and 1 o'clock today or tomorrow, we're running some drop-in clinics at the Innovation Hub stand in the exhibition part of the event, where some of our staff will be there to engage with people who want to talk to us about regulation or want to talk to us about specific aspects of doing business in the DIFC. I'll stop there.
Thanks, Peter. So tokenization, AI, and ESG, and particularly the sort of cutting edge of ESG, and I think you picked up an interesting point there about not just about achieving that ESG objective, but also making sure that things like greenwashing, so the less savable activities in that space, aren't occurring. You also mentioned something which I think is interesting because it's a common way that people think about regulators, which is, that they're often one step behind. I'm going to come back to Sopnendu on that. But before I get there, I want to turn to Gavin Michael. Gavin is the president and CEO of Bakkt. Bakkt are a digital asset infrastructure provider founded in 2018. And I know you recently fleshed out some of your offerings with the acquisition in April of Apex Crypto to allow you to provide a fuller suite of sort of execution, clearing, and custody to support those investing in digital assets. Crypto, digital assets, tokenization, more broadly, have really been prominently featured in headlines over the last 12 months, from company failures to new regulations coming in multiple jurisdictions around the world, including here in the UAE. How are you at Bakkt navigating that environment, and what are your plans to sort of maximize the value for clients as we look forward?
Sure. Thanks, Caroline. Good morning. It's a great pleasure to be here. So, Bakkt, our goal is to be that platform of choice for companies wanting to look to securely store a digital asset, so through custody operations, as well as being able to trade those assets in a variety of different venues in a highly regulated and compliant way. As Caroline said, we were founded in 2018, and we were founded out of the Intercontinental Exchange, the owners and operators of New York Stock Exchange. So having regulation and risk management at our core is very much part of what we do every day. We're highly focused on making sure that we're bringing the right regulatory solution to market. So that includes, the fact that we run money transmitter licenses in all 50 states of the US. We have a bank trust charter that acts as our custodial service. We run a broker-dealer license. We have FinCEN certified as well. And we make sure that we separate all of our activities. So we have our trading activities and our custodial activities run by different legal entities. By taking that approach, we're trying to work with our regulators in a very close fashion to make sure that we're following the way in which the guardrails should develop. Sometimes we're leading how those guardrails should develop, and in other times we're in a very consultative process with them about the next steps. There's no doubt that the activity over the last, year has cast an interesting set of circumstances through the crypto industry. There have been a number of failures, and when we look at those failures aren't necessarily to do with crypto as they are to do with risk management, compliance practices that you would see in any asset class. So as we think about our role in rehabilitating the view of crypto, we're spending a lot of time making sure that people understand how we work in that highly compliant, highly regulated way. We're spending time showing that crypto is a financial services innovation that enables us to get access to new use cases, enables us to make financial services, in some cases, more efficient than it is today, especially when you start to think about payments and the way payments can work in a cross-border or a streaming or a micropayment way. It gets much easier when we're using the crypto stack than using conventional rails. And so our goal is really to be able to show that what we're dealing with is more than just a speculative asset, that it has utility, that it is providing, as Peter said, ideas for tokenization of existing financial services products or real-world products. All of that requires a highly compliant, highly secure infrastructure to run on, and that's where we provide. In terms of how we work with our regulators to be able to understand the evolving guardrails and where we see them going. And right now I'm optimistic that we're starting to see regulators come out with a set of rules. As an operator right now, working in that world of ambiguity is kind of tough because we're trying to manage risk against a commercial enterprise. So when we see places like the UAE, we're seeing the UK, Hong Kong, are all starting to move forward with regulatory dialogue that really does paint those guardrails. The European Union, just passing MiCA over the last couple of weeks, again lays down those guardrails. And those guardrails are incredibly important for an innovator like us to be able to understand how we bring those innovations to market in a way that allow our partners to be able to take advantage of these new technologies, but knowing that they're doing it in a highly compliant, highly structured way. So I'm hopeful that the dialogues that we're starting to engage with, particularly in the US, are starting to show that there's a recognition that the ambiguity is not good, and in fact what it's doing is driving much of the innovation away from the US. And so our role is really in being able to be part of that dialogue with rule makers, with policymakers, with the regulators, to be able to show the advantage of these assets, how they can be run in a compliant way, how they can be utilized to be able to innovate against financial services, and how ultimately they're going to relate to consumers being able to do things in a much more easier, lower cost way.
I think you pick up something there which is really, an important comparative point in terms of both thinking about, the complexity of the regulatory environment in the US, not simply because though you have the sort of 50 state regulators and federal regulators on top of that, but simply the lack of clarity. And I think, that's where jurisdictions like here in the UAE offer that sort of simplicity of the relationship with regulators, which is really, particularly in emerging spaces, emerging technology, where there is a lot of experimental work going on, that's actually pretty critical to be able to carry out your business effectively. You mentioned payments as well, which is a nice segue because we're going to turn to somebody who's had some background experience in payments. But I want to focus with Guy Goldstein, who's the CEO of Next Insurance, on his current work, which is you co-founded Next in 2016, really to offer SMEs access to digital, affordable, and customized insurance using AI amongst other technologies. You've obviously grown incredibly quickly since then, tripling your business in 2021. You've had yourself a huge amount of experience in the fintech space. You're now in insurance, which is obviously a heavily regulated sector, Guy, and yet at Next you're also bringing some pretty impressive technologies to play. But I can imagine that explaining those to regulators and helping them understand what your business does and how it works can be a little bit complex. Can you tell us a little bit about Next and about that interaction that you have with regulators?
Yeah, thank you so much, and good morning, everyone. So just a few words about what is Next. Next is a technology company that's trying to reimagine how we sell insurance for small businesses. And currently we focus on the US alone, but obviously plan to expand as we continue to grow. We provide insurance for the business owners. These are the restaurant owner, personal trainer, lawyer, handyman, general contractors, like the people who are the core of the economy in the United States and probably around the world. And we provide them basically all the insurance needs that they need. We are doing the distribution for those customers, define the pricing, underwriting. We also deliver and claim. We literally the insurance company. NEC itself today have nearly 500,000 customers in the United States, selling nearly $1 billion of premium. And as we started kind of not long ago, we grew fairly fast over the last 7 years. As we speak about regulation, as you know, insurance been around for hundreds of years, and many of the regulation actually was written before the internet was even invented. And this is the things that we need to deal with as a company who doing everything digitally. We have no human interaction with our customers, like it's all 100% digital solution. And we're trying to use and leverage things like artificial intelligence to sell insurance to our customers and know how to price them in the right way. The regulator in the US, obviously it's a complex environment. There is 51 jurisdictions, 50 states plus DC of Columbia. And we need to deal with all of them, and each state has its own regulations and rules around the insurance. However, they all want to move forward and innovate. They all understand that change is coming. They all understand that you need to use technology, machine learning in order to do pricing and execute and give value to the customer. And the way we communicate with them is we are literally telling them everything about what we do and try to educate them as much as we can about the potential of what we are doing. There's a conference in the United States every 4 months. All the commissioner of every state, these are the people who are basically define the regulation. And they're meeting every quarter to listen from each other and also from technology companies in the space. And we always come and present there and speak with them and meet with them in order to make sure they are aware of what we are doing and so they can kind of move forward with the regulation. Obviously, regulation moving slower than technology companies, but we see a lot of openness for a change. And this change is an enabler to give value to customers, so the regulator understands it and trying to adopt it.
Thank you. And I think that we're going to come back to that point about that interaction, perhaps how that has changed a little bit over the last 10 years or so. But perhaps before I get there, I want to turn now to Sopnendu. Sopnendu, you're the Chief Fintech Officer of the Monetary Authority of Singapore, responsible for creating development strategies, public infrastructure, and policies around tech-driven innovation. Your experience spans the public and private sector, and you've been spearheading massive efforts for more than 5 years to ensure that Singapore is a leading global fintech hub. And I think for sort of people all around the world, Singapore and MAS specifically are often heralded as being extremely forward-looking when it comes to the world of fintech. In your role as the Chief Fintech Officer, what do you think are the elements of your strategy that are most important in achieving that objective?
Thanks. When people talk about a fintech strategy from a public policy perspective, there are many things we do common across the globe, whether it's a fintech policy, whether it's a sandbox, whether it's an incentive for people to do different things in different markets. But for me, the most striking, there are 3 things which makes a fintech center quite distinctly different. Is first, you would look at the regulators in that center. Are they driving public-private partnership on key projects which will define and change the future of finance? What I meant here is that, let's say crypto, let's say AI, let's say digital currency. It is important for the regulators of that center to actually lead public-private projects which will drive that transformation. You can't, as a regulator, as a regulated industry, if you leave technology to the industry itself, the process gets complex. By the time you, as a regulator, you come and put policies, it can go against the innovation. So it's important that regulators and the industry should come together and create a series of public-private projects of a large consortium-based design, which allows the industry to start believing that certain technology will be accepted in the market, both by regulators and the consumer, and together they can drive a distinct transformation. So that's one. The second one is more complex and much more difficult. It's important for central bankers and regulators to actually drive public infrastructure which will assist fintechs to do better things. When I say public infrastructure, it means they must be accountable to build a world-class payment system. They must be accountable to build a highly interoperable digital ID system. They must be accountable to make an open banking infrastructure to move data in a seamless way. These are public infrastructure. You got to build it before thinking about FinTech Center. Because if you don't build it, you get the wrong business model. You don't want FinTech to be arbitraging an inefficient system. That's the last thing you want FinTech to do. What FinTech should focus on, good business model, innovative and creative consumer products. And to avoid that arbitration of bad system or bad processes, you got to put together a public infrastructure. And that's the second responsibility of a regulator or a central bank in a particular center. And the third one is active intervention, not in good times, in bad times. If the crypto market has gone bad, that's not time regulators should step out. They should get into the market, understand what is going wrong. They should do a public consultation. They should actually work with industry to figure out what can be done better. Similarly, if AI goes in the wrong way, we should not step out. We should go more into the system, understand how AI is going to make things easier, what are the risks you may carry in the system. So there are these examples where active intervention by a regulator makes that difference to the system and to the ecosystem. So to me, these are the three strategies: difficult, complex, but if you don't do that, you don't chance to be differentiated with other centers.
Could I ask you maybe just to expand on that a little bit? Because I think you've picked up two things there, sort of like almost a secret sauce of Singapore, if I can, when it comes to fintech, which is this idea of public-private partnership and also investment in the public infrastructure. And I can imagine that requires you to have a lot of top-down support for the resources that must be required to actually execute on a strategy like that. It's much more than simply being a regulator, in a sense, is what you're talking about. But I think perhaps sort of a concrete example of that sort of PPP piece could really help us.
Okay, so let's example the first one. When digital currency, crypto has come into the market, we started a project called Project Ubin. It is a 5-year project which went through a massive, complex industry engagement. In fact, we're the first central banker to actually publish code in GitHub in the public space. So imagine a central banker actually putting software code for industry to engage. That truly sends a strong signal that you are intending to make a better system if you want to. And Project Ubin, for example, went through a multiple cycle. It's actually a 5-stage process. And what it created a company called Partior in Singapore, which provides a market infrastructure for settling digital currency. Other example would be, we started a program called Project Veritas. Okay. In this project, we wanted to examine how to apply fairness, ethics, accountability, and transparency in AI. Well, you can say as a regulator that AI must be fit compliant, but how do you do it? So that's where we went into the program. We created open source code, allowed industry to work together, and that code base is now getting into different AI solutions to help the AI solutions to go to banks and say this AI solution is complying to fairness, ethics, accountability, and transparency processes. So this is a way a public-private partnership works. You actually write a piece of code. I don't think regulators and central bankers come to we are in a time where they can step away from technology. They've got to make the hand dirty in the technology space. You cannot just run an ecosystem by pure policy objective. It has to be experimental. It has to be deeply integrated with the local ecosystem.
I think you pick up something there that Jenny Johnson from Franklin Templeton mentioned earlier. That, actually, for example, just using ChatGPT to write code, but sort of getting out there and getting your hands dirty is what you're really talking about.
And the ChatGPT, Singapore started a project called MindForge. We are working with in the industry to build a set of code that ChatGPT should be using as they deploy in the financial sector. These are the interesting examples of how you can deeply integrate into this set of innovation.
And that sort of, I think, partnership really defines a lot about, what Singapore stands for in the fintech space. Peter, I want to turn to you as sort of the other regulator on the panel. How do you think the interactions between regulators and industry have changed over the last sort of 10 to 15 years? I know you've been here in Dubai for about a decade, and before that in the UK. How have things shifted?
So I think there's always been engagement between the industry and regulators, as you would expect. So in one sense, things haven't changed. But I think what we've seen, particularly I would say since about 2016, 2017, I think, in terms of the real starts of our innovation ecosystem here in Dubai and in the UAE, I think we've seen more people coming forward with more ideas, which is great. It also has its challenges, and particularly, as a regulator, where we're often having these discussions, these ideas with people who have no idea, and in many reasons there's no reason why they should have much an idea about what financial services regulation requires and what obligations they may face. And there's traditionally a mismatch in terms of responsiveness from regulators and in terms of understanding from regulators. And we've been working over the last 5 years to try and close that gap. Still got work to do, if we're honest, but in terms of closing out that gap, as I said earlier, but by engagement, by having, so there's lots more conversations. The other thing that's worth noting, I think, is that the nature of the conversation between regulators has changed around a lot of the innovation topics, and that's because nobody's supervised this market before. In some areas, we haven't had this type of market or this type of delivery mechanism, or however you want to describe it, to supervise before. So learning from each other, which is what regulators have traditionally done in the past, it's now more learning with each other and having conversations where nobody claims to have the answers. So there's been a lot more of that, but that's been informed by an awful lot more conversations with firms who are already regulated, and more with firms who aren't already regulated.
The theme today was really about that collaboration between regulators and industry, but you're sort of saying that, in addition to that collaboration between regulators is just as important with the pace of technology change.
Yeah, I think so, and I think, if you look at some of the business models, and I don't want to come back to crypto every time, but in some of the crypto areas, there are some global business models. Do they fit with national or jurisdiction-based regulation? Well, not obviously, but they don't in the US either, as Guy has already mentioned. Yeah. So there are challenges there, and regulators are going to have to work out how to work together differently to address some of the facts that some of these businesses are essentially borderless. Yeah. The way we've done things for the last 15, 20 years works for lots of things and will work for lots of things that are driven by innovation, but it won't work for everything. So there will need to be new forms of regulation emerging as well in response to what we're seeing and where technology is pushing the industry. Gavin,
Guy, you're running businesses, and yet I imagine you're probably having to spend a fair amount of time, from what I hear, having that interaction with regulators. And I hear sort of some of the things that were mentioned there from the regulators, about responsiveness, about that sort of interaction. What do you think is the greatest challenge for you, while running a business and trying to sort of make a sort of a going concern in needing to build into that thinking across the firm, really? I imagine, that the interaction with regulators is fairly key. Perhaps Gavin first.
Yeah, sure. I think, as Peter said, we've always had interactions with our regulators. And like Guy, we're a state-based regulated company, so we have 50 state regulators plus our federal regulators. The challenge has been that most of those interactions are really about compliance topics, as they should be. But as we get into more innovation, it's really wanting to learn from us about ways in which we want to see the regulations progress in order for us to be able to run a going concern. And I think what I spend the time talking throughout our company with is, we're compliant first, we're regulatory first, we have that in everything we do, but being able to take it to the point that we start to understand how we can do things better with the regulators. So, spending time with, the NYDFS, understanding where their concerns are and showing how we're meeting those, or places that we see gaps. I mean, we know what a comprehensive regulatory framework looks like. It has, KYC, it has AML, it has consumer protection in it. And at times, when you look at the way in which some of the assets that we support are treated, parts of that regulatory framework aren't as strong as they could be. So spending time with the regulators beyond just the compliance functions into one of wanting to be more collaborative, more cooperative as we start to strive in how regulation gets formed. And we're encouraged. There's so much more consultation happening now around the world. We see white papers coming out from the Australian Treasury, from UK Treasury, from HKMA, all of those seeking comment from industry participants in how we can start to move forward. We've recently seen from the SEC a safeguarding comment paper around qualified custodians for digital assets. We're a qualified custodian for a digital asset right now, and we have views on how that should move forward. So we're partaking in those processes, and I think that's the biggest change. And one for the positive is that we want the interaction, but we want the interaction to move beyond a compliant discussion and into one of comment and learning from each other.
And I want to come back to that to think a little bit also about, often, as you mentioned, you've got the policy objective, AML, for example, but whether there is, in fact, in your experience, a real desire to allow innovative approaches to achieving that objective rather than the sort of copy and paste from the traditional world into the new sort of world of emerging technologies. But perhaps, Guy, you first. How has, I guess, that challenge for you in terms of the amount of resources you're having to spend in those interactions with regulators? And how do you think, in very practical terms, they've actually sort of, this idea of things like supervisory technology, regulatory technology, their openness to that in the insurance tech space?
Okay, so that's a big question, many questions here. I would say there are three areas that we are working with the regulators, that I think the regulators are regulating us. The first one is to make sure that we are not going out of business and we are well capitalized and kind of the core business. And I think regulator, obviously, this is annoying that you need to work on it, but it's really important because it's important for the customer. It's also keep us as a better company and make sure things like what happened in Silicon Valley Bank is not happening. The second thing that we are working with regulator is around just moving forward with the internet, so customers won't have to sign something and you can sign digitally and things like this. And the third one, which is the most challenging one, is around what's coming around machine learning and this type of things that the regulator still doesn't know how to deal with it, and it's very difficult to know what you're actually doing as a company, so it's a complex, and I think the regulator is a bit behind around this, but definitely want to move forward to understand better. We invest significant amount of resources, I would say, almost 10% of our company working with regulator on a constant basis, because every change we want to do, a regulator needs to approve. And the challenges that we have with regulators are usually speed and capabilities, like how fast can they approve something that we want to do that is new. And the second thing is, are they approving it? Not just how fast, but are they approving it, yes or not? So these are kind of the operation with the regulator, and I think the more they can move faster and make capabilities around the new things that are coming around machine learning and stuff, then that would be very helpful. Which relate to what you asked me on RegTech, I don't see it much in insurance right now, so I don't think our regulator are using it. It could help to understand better, and gather a significant amount of data and digest it much faster, which will increase the speed of the regulator. The challenge with this, I would say, is that I found it challenging for the regulator to develop those technology by themselves. And they'll have to use external companies actually to develop this. And then how do you regulate these companies and make sure that what they do is actually good to regulate you? These are kind of the challenges that I see in this, but it's definitely can help us move forward and execute faster.
So maybe there's an opportunity there for RegTech in the insurance space. I know we only have a few minutes remaining, so I want to give a chance to sort of think about your wish list as we kind of look into the future. When it comes to improving industry and regulator collaboration in the fintech space, what would be your sort of one wish? And it might be, you've already mentioned there, Guy, things like, the development of more regulatory technology to actually automate and facilitate some of that relationship. There might be more opportunities for collaboration. But Sopnendu, over to you. What's your one wish?
No, I just take from Michael's comment that he was talking about a broad industry challenges on AML, KYC, so I think what regulators can do, and they should do, given we're in a FinTech summit, is that have that ability to build common infrastructure to take out this problem out of the system. Why you want banks to indulge on a common problem called AML? Why you want banks to, fintechs to solve an inefficient payment system? You want your regulator to step in and take out this common problem and build common infrastructure. That's one. Second thing, I think to all of their point, I think it's important for regulators to develop capacity to understand what these business models are. Today, capital doesn't meet policies same time. They're in different cycle. The investors are putting money today without thinking about regulation. Regulators come after 10 years cycle with the regulation. That's not going to work. So we go to make the capital and the policymaker to come together and start developing that early stage engagement. That would be my wish list.
I do want to sort of one of the things you mentioned KYC as an example of sort of common infrastructure that could be built. I know that MAS has done a lot in this space and has really demonstrated the ability to improve the quality of outcomes through, say, for example, sharing of KYC data between institutions. The challenge, of course, seems to be, though, that how do you move that to incentivize into those new business models that would be required?
Yeah, but I can tell you, go across any fintech, they don't want to spend money and resources on AML. They love not to spend any money there. They want to serve consumer. They want that infrastructure to be a commonly shared, well-governed public service. So I don't see the incentives have to be much of issue here. Incentives are there. It's just that willpower and that ability to execute infrastructure. And I'll give a small example. When we were connecting our payment system to Thailand, we almost had an identical system. It took us 3 years to connect. Why? Policy alignment, AML alignment, KYC alignment. So we got to get that thing aligned so that there's all this friction in the system don't exist.
So you got to experience what fintech firms experience every day. It's good to know. Guy, what would be your one wish in this space?
I would like speed. So that's the one thing we would like to get from regulators. And I think the way to get there, they're not going to work faster. The way to get there is to focus on the more important thing the regulator need to do and few things to just let the company go.
Okay, so sort of like streamline their focus, not ask them to walk faster. I love that. Peter?
I think the things I've already said around engagement are really, you can't have too much in this area because there are so many smart people out there creating so many interesting things. As I said earlier, some of which we should be worried about and some of which we shouldn't be worried about, frankly. But unless we have the conversations, unless people come and talk to us and we go and talk to people, you can't have the conversations. And then you don't know where to focus your effort, which makes it quite difficult to be if we're focusing on innovation, we shouldn't be, we have limited resource, as everybody does, we can't devote it everywhere. So, more engagement. Please don't be afraid of coming and talking to the regulator. We're publishing a consultation this week on a call for evidence on improvements to our crowdfunding regime. And we want engagement with the industry on that, because unless we have the understanding of the sorts of points that Guy and Gavin have made about where the frictions arise in their operations, we can't do what Sopnendu has just said and legislate to take them out of the system, or at least improve them, even if we can't take them all out of the system. Yeah. So more and more cooperation, please.
So it sounds like that 10% of resources you're already allocating into the regulator relationship is not going to decrease anytime soon if Peter has his way. Gavin, your final wish for the future of collaboration with regulators?
I mean, mine's straightforward. It's one of clarity, moving beyond regulation by enforcement and into one where we're seeing rules and speed to rule making, so that we're getting the approvals at the pace at which we need it in order to be able to run the business and to be at the forefront of innovation.
We often talk, particularly, in the events of the last 12 months in digital assets, around the sort of flight to quality that, in terms of people looking for businesses that kind of have that regulatory first environment. And I wonder too, that sort of flight to clarity is that we're also seeing this looking to jurisdictions that do provide that regulatory clarity to allow that innovation to grow, whether it be insurance or in digital assets or other parts of the sort of fintech space. Thank you very much. I think you've left all of the audience with not just kind of your perception of the roles that you bring and what you're doing, but also kind of what's so important for all of us in engaging, whether you're a regulator or you're an industry, to actually build the future that we'd like to see for finance. Thank you.
Thank you.
Thank you.